Hello and welcome to the Business Standard Banking Show. 2023 was a roller coaster for the insurance sectors. A host of regulations was introduced with an aim to increase penetration. New regulations were introduced for providing flexibility to the insurance companies. How will 2024 be for the insurance companies? As we enter the last quarter of the financial year, will the sales improve? To discuss some of these issues, we have today with us Sarbvir Singh, Group CEO of PV FinTech. Mr. Singh, welcome to the show.
Yeah, thanks, Manojit. Happy to be on your show.
Thank you, sir. Let me start with the growth numbers that we have seen in the financial year so far. With new business premium for many insurance companies, including the LIC, was muted, mainly because of the taxation changes that we have seen in budget of this year. Do you think the trend will change in the 2024?
So I think, there were a couple of factors I would say towards that. One was the factor that you referenced, which was the change, in the budget, which actually impacted more policies which are larger than 5 lakhs. So if the
Right.
premium for the year is greater than 5 lakhs. So I think, but that at some level, I think created a bit of a, I would say, a lot of business got pulled into March. So it was a bit slower after that. I think the second thing was also that, guaranteed products, the non-par products, they were very popular till last year. And now this year, what has happened is with rates going up, I think the, deposit rates have gone up. And so
Right.
they, especially depending on your tax bracket, they don't look as attractive as they were looking last year, because last year the guarantees were higher than the deposit rates. And this year, the guarantees tend to be less than equal to. And I think that, again, like I said, it depends on your tax situation, but they're less attractive. So
Right.
I think those were two factors, which is why you've seen that ULIPs have actually done better this year. So if you see the composition of the industry also in the first sort of 8 months, that the data that we have, the composition of the industry has also somewhat changed, where ULIPs have done better. Some of these guaranteed products and other products have not done as well. Now, I think if you look at the next quarter, which is the last quarter of this financial year, I think that quarter will be similar to what we've seen in the first 8-9 months, because
Okay.
the same factors will play out. Now,
And
going
also the
forward,
base is very high for the last quarter.
exactly, and March will definitely be a difficult month because last year the base was very, very high. So I
Yeah.
think that factor will play out. But as you look beyond March, I think then things will normalize again. And I
Okay.
think we will, see probably a return to a more normal growth level. And that's why I also feel that we should look at 2 years in a row. I mean, you should look at 2 years together, and then you'll find that it gives you a much more normalized growth rate, which is probably, a more fairer way of looking at the industries.
Now, some of the companies recently have launched non-par products, including LIC, and they want to change the growth trajectory with those products. Have you seen traction in those products so far?
As you know, consumers come to Policybazaar, right? And they, at this point, appear to be more focused on ULIPs and the
Okay.
capital guarantee solution that we sell. So we largely sell two types, ULIPs, which are right now, of course, very much in demand because of the way the markets are doing. And, the fact that I think the Indian middle class is slowly but surely appreciating the fact that equity is the solution to their long-term financial planning.
I
Now,
see.
of
That's
course,
interesting.
yeah, so I think that, whether you look at the SIP data, so if you see the, amount of money going into SIPs, and that has been very sort of resilient, irrespective of whether market goes up or down, people have been putting more money in. Of course, I would caution that the market has been doing very well. So, in times like this, I think one has to be a little bit careful about drawing long-term conclusions. But I
Right.
do feel that fundamental point has changed. And people have started to believe that in a 5-6% inflationary environment that we live in, right, in India, I think equity is one of the solutions for long-term wealth creation, especially if you want to beat inflation. So I
Right.
think
Right.
that is happening. So because of which ULIPs are in demand, and we have a capital guarantee solution where we combine a ULIP and a non-par, which ensures that the premium that you have paid you will get at least that much money back, and
Correct.
the ULIP will provide the upside for the solution.
Now, coming to term policies, what has been your experience in the term policies in this financial year? I'm asking this because term rates have declined. So, has that boosted sales?
So I think in term, two things have happened. Term, we had a difficult period, especially after COVID, because I think reinsurers had become very strict and things like that. So, that market actually struggled for a couple of years. And I would say this year, for the first time after 2 years at least, the term market is growing quite strongly. And I think that is because of the fact that one is that the rules have become much more clearer, I would say. So I think things have become much more logical. The prices are at a point where people can, which, see, term has always been an affordable product. Even 2 years ago, it was affordable. Even today, despite the price increases, it has been affordable. I actually don't think, Manojit, that prices have really come down or anything like that. I think prices are more or less, I would say, stable. In fact, some people have
Okay.
raised prices, some prices have been corrected. So it's, I would say, the prices are stable. But I think demand has come back because issuance is better. See, in term
Okay.
insurance, the problem is that if 100 people buy the policy, probably only 67, 68 people or 70 people will get the policy, right? So that number actually had gone down. It had, gone down to even sub 60 levels. So now
Okay.
the fact that issuance is happening, I think people are more comfortable in buying term. Term continues to be a fantastic value proposition, and I think today term rates in India are still lower than term rates in developed economies, where clearly
Right.
the life expectancy and quality of life cannot be compared, right, between the two situations.
I will just briefly touch upon one more important issue which IRDA recently talked about. They have issued a consultation paper on surrender value, which has kind of made the insurance companies worried. How do you see the impact of on insurers because of this? If this new regulation comes in terms of profitability.
Manoj, I would refrain from commenting on insurers' profitability. I think that is a function of many variables, and I'm sure they are best placed to answer those questions. From our limited perspective, I would say that, as I told you, we are not very big in selling non-par products. We sell them more as a combination.
Right.
I think from our perspective, anything that is good for the customer in the long run is good for the industry also.
Right.
Having said that, I think what is more important, in my opinion, what gets lost in sometimes in these debates. See, one is a very surface level discussion of what do you get when you surrender. But I think the fundamental question is actually one level deeper, which is that how was the product explained to the customer? Did the customer understand what the product is? Let me give you an example. Even today, if you take a fixed deposit, and if you put a fixed deposit for 5 years, and if you break the fixed deposit, consumers know that there will be penalties, right? You can break it, but it's not as if you'll get the same amount of money that you would have got if you had, or the same interest rate if you had kept it for 5 years. So all financial products have to have a asset liability matching, right? It's not possible. If I believe that I've got money for 10 years, and if that money has to be returned after 1 year, that has a financial impact on me as a manufacturer. So my point actually is different. My point is not about just about surrender value, but it's also about the education. Did the
Right.
customer understand the product or not? And I think that's what we
Right.
need to strive towards. That if the customer understands that, yes, I am buying a product for 10 years, for 15 years, for 20 years, then yes, and yes, there may be some penalties. Now, it's between the regulator and the insurance companies to decide what those penalties should be. But yes, there will be some penalty if I were to break the policy earlier. Right? I think
Right.
that's fair.
Right.
The problem happens when the rules are not clear. As in, if I
Right.
don't understand that I'm buying a product for 25 or 35 years and I expect to not pay even for 5 years. So I think that is what the industry should focus on. And that's what we as a platform focus on, is to make sure that there is transparency in the dealing, that the customer is buying something that they understand what is the return going to be, what is it linked to. So like in a ULIP, it's not, no one can say what is the return, right? But what we can say is that it is linked to the stock market, right? Similarly,
Correct.
you have to explain. And I think that's, to my mind, that's a more important point.
Another issue I am coming to again, an initiative of the IRDA, which is the Bima Sugam, an online platform where a customer can choose from multiple products. It's an aggregator like a Policybazaar. How do you see the impact of on business of Policybazaar due to Bima Sugam, and what are the plans to address the competition coming from this particular portal which has been proposed?
I think, Manoj, we look at it slightly differently, in the sense that what we believe is that finally the objectives of the regulator and Policybazaar are obviously not different at all, right? You know, Chairman Sir has said that we should have insurance for all by 2047, right?
Correct.
And that's something that we wholeheartedly believe in, because we are a mission-driven company. We have always said that we want to cover every Indian in middle class should have protection, right, against the vagaries of life, against the risks that one faces, death, disease, disability. So that's our goal. And honestly, anything that we do in that direction, we always welcome. And we look at Bima Sugam and all the initiatives of IRDA as a step in that direction. There are lots of people who are working towards insurance, and as, if it can help these people, if it can help all of us, and that's what we understand the platform will do. So I think, honestly, as a member of the industry, we would be very, very happy if more and more Indians buy insurance. And I'm sure if we do a good job of serving our customers, some of them will buy from us also.
Also, staying on Policybazaar, now Policybazaar has started rolling out physical branches also. How
Correct.
has been the experience so far?
So I think, just to explain that a little bit, see, we on our platform, we never approach anyone for insurance. Customer comes to Policybazaar and says that I'm looking for this kind of insurance, or that kind, and they obviously share their details, and then we talk to them or we meet them or whatever. So from our perspective, I think more than branches, I would say these are places where our people are there, such that if a customer wants to meet. So one of the things that we discovered is that customers still prefer, in many locations, still prefer to meet a physical person before
Right.
they buy it. Right? It seems more. It builds trust. It allows them to, ask questions. It's much more persuasive, I would say.
Right.
So what we have done is created that same capability, just as we have the capability of talking on the phone or doing a video call or something like that. The same thing we have done, that if you wish to, so you as a customer come to Policybazaar, you wish to meet a person in physically, we will have that person come and meet you at your home, in your office, or wherever you prefer. In the public domain, we have shared that almost 20% of our life and health business now is being coming through these physical channels. And I think that it tells you that it is slowly becoming a significant part of our business.
And finally, on the financials, PP Fintech's Q2 losses narrowed significantly. So when do you see that profitability on a sustainable basis?
Yeah, I think, again, I would not want to speculate on anything. I think it has been our stated. I think Yashish has said that on the last call also, that we expect to be profitable soon, and I think more importantly, I would again urge you to see the direction of the results. Right, that's a number, right? It's a number which will hopefully be reached. But more than that, I think if you see the direction, our core business has continued to, be significantly profitable quarter after quarter now for the last, I think, 5-6 quarters. Our new initiatives have scaled up, and the investment in those initiatives has also kind of is sort of going down, or is flattish. So I think the shape of the business is in the right direction. I think our contribution margin, if you see, is very significant. So every rupee of revenue that we get brings in certain profitability, and then that starts to cover the fixed cost. So I think that is kind of one of the factors. And every quarter, I think we've been making sort of progress. If you see, we've kind of just kept doing whatever we said we would do. We haven't changed our strategy in any way, in the last 2 years since we became public. And I think the good news is that that has worked, right? And that the model seems to be working. So if that model continues to work, you will find that, as the more revenue comes in and it creates, we have contribution, that will slowly and but surely keep covering the fixed costs in a bigger and bigger way. And there was one technical thing which I think your viewers and you should always keep in mind, that we had this whole charge for ESOPs, right? And that charge, obviously works it's an accounting charge, that the dilution of the shares, etc., has already been done, right? That was done at the time of the IPO itself.
Right.
So I think it's a charge that was being taken, and that charge, works in a mechanical way, and it keeps going down every 4 quarters. So that's the other reason why, while sometimes the optical results have looked like as if they are very red, but we have never felt that, because we could see that, it was related to some of these charges and things like that, and that is coming down. So yeah, I think it's a long answer to your question, but
no, but the point you have made is that the model is working, and the path is very clear going ahead. That is the crux of the matter, if I can understand you correctly.
True, true. Absolutely.
Right, right. On that note, Mr. Singh, it was a pleasure talking to you. Thank you for speaking to Business Standard.
Thank you. Thank you, Manojit. Happy New Year to you and to all your viewers.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.